So, when you think of an exciting high growth stock, a giant healthcare distributor probably isn't the first thing that pops into your head, right? But today we're going to talk about Cardinal Health. And believe it or not, this company is quietly pulling off one of the most compelling turnaround stories out there right now. So, let's just get right to it. For any investor looking at this company, the question is pretty straightforward. You see this huge, kind of boring healthcare giant on the surface, but is there a secret growth story hiding underneath? Is there a high growth engine that the market just hasn't woken up to yet? Well, that's what we're here to figure out. All right, so to really get a handle on where Cardinal is headed, we've got to look back at where it's been. And honestly, for years, this company was just stuck. It was weighed down by a couple of massive, crippling problems that just cast this huge dark shadow over the stock. Okay, so problem number one, the opioid crisis. This was a huge deal. You had this massive, completely unquantifiable legal risk hanging over their heads. Nobody, and I mean nobody, knew how big that final bill was going to be. And if there's one thing Wall Street absolutely hates, it's uncertainty. Then, on the other hand, their medical segment was a total mess. It was struggling with inflation, all sorts of operational issues. It got so bad they had to take a $2.1 billion write-down in fiscal 22. Just a huge hit. And look, both of those were bad, but the opioid litigation, that was the real anchor dragging the whole company down. We're not talking about just another line item on a balance sheet. No way. This was a potential company killer. It created so much noise that it was pretty much impossible for investors to focus on anything else. So with these giant problems just defining the entire story, you have to ask, what changed? How did they turn it around? Well, this is where things get really interesting. Management started clearing the decks, so to speak, and this led to a critical inflection point that completely changed the entire investment case for Cardinal Health. So in February of 2022, the fog finally lifted. The number came out, a $6.4 billion settlement. Now that is a massive, staggering figure by any standard. But that number alone, it doesn't tell the whole story, not even close. Because here's the crucial detail, the part that changes everything. That $6.4 billion is payable over 18 years. And just like that, what seemed like an existential threat, a company killer, it suddenly became a manageable long-term liability. All that uncertainty that had just paralyzed the stock for years. Poof, it was gone. You see, this de-risking of the balance sheet, it was a profoundly positive catalyst for the stock. It allowed investors to finally refocus on the company's fundamental operating performance. People could stop obsessing over this worst-case legal nightmare and actually start looking at the business itself. And what they saw, they started to like. Okay, so the biggest dark cloud have gone, but management didn't just sit back and take a victory lap. No, they saw this as their moment. They decided to capitalize on this new clarity by rolling out a completely new blueprint for growth, a new way of thinking about the future of the company. What they did was a strategic reorganization which took effect in January of 2024. Now, I know that sounds like dry corporate speak, but this was a big deal. It wasn't just about moving some names around on an org chart. No, this was a deliberate move designed to increase focus, give investors more transparency, and most importantly, shine a huge spotlight on their high-growth businesses. And what came out of this was a new three-part structure. First, you have the Pharmaceutical and Specialty Solutions group. Think of this as the stable, profitable core of the business. Second, you've got global medical products. This is that segment that was struggling, but now it's a real turnaround story. And then there's the third piece, simply called Other. And this is the magic part. It's the new, high-growth engine where they put all their best new businesses that were kind of hidden before. And to power up this new growth engine, they went on a bit of a shopping spree, a series of very smart acquisitions. They bought up things like Specialty Networks, ION, GI Alliance, Solaris Health, all these groups that work directly with doctors in high-value areas like urology, oncology, and gastroenterology. But again, this wasn't just random M&A. It was all part of a bigger plan. Because all of these acquisitions were designed to create one specific thing, something that investors love to see, a powerful flywheel effect. So what exactly is this flywheel effect? It's genius, really. On one side, by owning or partnering with all these physician groups, Cardinal secures a captive audience, a direct channel to sell its most profitable, high-margin specialty drugs. But then, and this is the other side of the flywheel, they also provide all these other services to the doctors, like data analytics and practice management software. This makes their whole ecosystem incredibly sticky. It becomes really, really hard for a competitor to come in and steal that business away. So that's the story, right? It's a great narrative. But you and I both know a great story doesn't mean much to an investor if the numbers don't back it up. So the big question is this new strategy actually paying off? Let's dig into the financials and see for ourselves. This chart here gives us a really nice 7-year snapshot. Revenue growth is solid, which is great. But let's zero in on the number that really matters to shareholders, the non-GAAP diluted EPS. You can see it dipped in fiscal 22, right at the height of all those problems we talked about. But since then, it has absolutely roared back. We're looking at a projection of $8.24 for fiscal 2025. That is a serious, powerful recovery. But what's really exciting to me isn't just the recovery, it's the acceleration. Look at this. The company's on track for 9% earnings growth in fiscal 25. That's solid. But then, their guidance for fiscal 26 is for 13 to 15% growth. The growth rate is actually getting faster. Now that is the kind of momentum that really gets the market's attention. And what's making all of this possible? It's simple. Cash. A ton of it. The company is projecting it's going to generate around $3 billion in adjusted free cash flow in fiscal 2026. That cash is the fuel for the entire engine. It's what pays for the acquisitions, it funds the dividend, and it lets them buy back their own stock, which helps boost that EPS number even higher. All right, let's bring it all home. We've talked about the troubled past, we've seen the huge strategic shift, and we've looked at the numbers that seem to back it all up. So, what's the bottom line for an investor looking at the company right now? Well, you've got your classic bull versus bear debate. The bull case is pretty simple. They just keep doing what they're doing. The execution stays flawless, that flywheel strategy creates massive synergies, and eventually the market wakes up and gives the company the higher valuation it deserves. The bear case, well, that's about the risks. What if the turnaround in the medical segment hits a wall? What if those acquisitions don't integrate well? Or what if new pricing pressure comes along and squeezes the margins in their core business? So, if you're an investor watching this story play out, these are the signposts you need to look for. You've got to keep a close eye on the margin growth in that medical segment. You absolutely have to watch the performance of that other and specialty business. That's the growth engine. Make sure they hit or beat their free cash flow targets. And finally, watch to see that they're disciplined about buying back shares and paying out that dividend. And that really brings us full circle, right back to our original question. There's no doubt that Cardinal Health has a brand new story to tell. It's a story of transformation, of de-risking, and of a new focus on growth. The only question left is whether the market has really started listening yet. And if it hasn't, how much time is left before everybody else catches on?